Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings. Today we're diving into a fascinating little report that might just reveal some early shaky steps of a company looking to make a splash. This isn't a yearly or quarterly check-in, but a special report of Form 8, which is like a company's way of saying, hey, something important just happened and we need to tell everyone right away. And for Tavia Acquisition Corp, or Tavia as we might know them from their stock market ticker, something important indeed just occurred, signaling a potential new beginning or a move towards a significant business deal. So what is the big news? Well, it looks like Tavia Acquisition Corp took out a loan. Now, loans are pretty standard for businesses, but the details here are what make it interesting. This wasn't just any loan to keep the lights on. It is a specific kind of financial arrangement that often points to a company getting ready for a major event, like a merger or acquisition. Specifically, on the 2nd of February 2026, Tavia Acquisition Corp entered into a promissory note, which is basically an IOU with Early Bird Capital Incorporated. This company, Early Bird Capital Inc., is described as the representative of the underwriters for Tavia's initial public offering, or IPO. Think of them as the folks who helped Tavia sell its shares to the public for the first time. The loan itself is for up to $300,000. Now, that might not sound like a colossal amount for a publicly traded company, but it is the context that matters. This promissory note is non-interest bearing, meaning Tavia isn't paying extra just to borrow the money. And the crucial part, all the money borrowed under this note is due either when they successfully complete a business combination, which means buying or merging with another company, or if they have to close down shop or liquidate and can't find a business deal. This part is quite telling. Tavia can use money they got from their IPO that isn't held in a special trust account to pay back this loan if they don't find a business to buy. But, and this is a big but, they absolutely cannot touch the money in that trust account for this repayment. If the funds outside the trust account aren't enough to cover the $300,000, the note might not get fully repaid. This suggests that the company is preparing for an acquisition, and this loan is likely to cover expenses related to finding and closing that deal. It is essentially a way to fund their search for a target company. To understand why this loan is significant, we need to look at the structure of Tavia Acquisition Corp. They're what is known as a Special Purpose Acquisition Company, or SPAC. On the stock market, you'll see their trading symbols. We have TAVU for their units, which are made up of one ordinary share and one right. Then there is TAVI for the ordinary shares themselves, each with a tiny par value of $0.0001. And finally, TAVA for the rights, which give holders the option to buy a fraction of an ordinary share. These are all traded on the Nasdaq Stock Market LLC. These SPACs are essentially shell companies that go public with the sole purpose of raising money to acquire an existing company. They have a limited time frame, usually around 2 years, to find a business. If they don't, the money raised from the IPO is typically returned to the investors. So this $300,000 promissory note is probably being used for the operational costs and due diligence involved in identifying potential acquisition targets. It's the fuel for their search engine, if you will. The filing also lets us know that Tavia Acquisition Corp identifies as an emerging growth company. This means they get some regulatory flexibility, which is common for newer companies. They have also elected not to use the extended transition period for complying with new or revised financial accounting standards, meaning they're on track to follow the latest rules sooner rather than later. Now, about the financial table analysis. While this report, a Form 8K, isn't primarily about detailed financial statements like a 10K or 10Q, the implications of this promissory note are tied to Tavia's financial strategy. The most relevant financial aspect here is the loan itself, the $300,000 from Early Bird Capital Inc. This isn't a number that shows revenue or profit, but it is a key indicator of operational funding for their acquisition search. The fact that it is non-interest bearing and has specific repayment terms tied to a successful merger means the company is trying to minimize immediate financial strain while it focuses on its main goal. Any funds used from outside the trust account would reduce the capital available for the actual acquisition itself, but this loan is likely intended to cover expenses like legal fees, advisory services, and travel related to identifying and negotiating with potential targets. The key takeaway is not a number reflecting past performance, but a number representing a strategic investment in future growth. Looking at this filing, it seems Tavia Acquisition Corp is actively pursuing its mission to find and merge with another business. This loan is a clear signal that they are investing resources into that search. It is a proactive step that tells us they're serious about finding a deal within their time frame. What does this mean for the company's direction? Well, the strengths here are clear. They are taking concrete steps to fund their core objective, which is finding an acquisition target. This shows a commitment from management to execute their strategy. The weakness, though not a direct financial one in this report, is the inherent risk of SPACs. They have limited time to find a suitable business, and the success of the company hinges entirely on that future acquisition. There is also the risk that they might not find a deal, or they might overpay for a company in a competitive market. The notable opportunity is the potential for Tavia to bring a promising, perhaps undervalued private company into the public markets. If they can find the right partner, it could be a win-win. The primary risk, as mentioned, is the failure to complete a business combination within the mandated period, which would lead to the return of IPO funds to investors and likely the dissolution of the SPAC itself. In conclusion, this Form 8K filing, while brief, reveals Tavia Acquisition Corp. Is moving forward with its acquisition strategy by securing necessary funding. It highlights the critical nature of their search and the financial mechanisms they are employing to achieve it. Investors in Tavia will be watching closely for news of a potential business combination, as that is the ultimate determinant of this SPAC success. Alright, that is our breakdown of Tavia Acquisition Corp. Its latest filing, what is your take on these numbers and what they signal for the company's future? Do you think they will find a suitable acquisition target? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions and to connect with fellow corporate explorers. Thanks for watching. See you next time.